The broadcast is now starting. All attendees are in listen-only mode.
Hey, good morning, everybody. Doug Mitchell here with Ogletree Financial. I want to thank you for taking your time out to be on our call today. We have Shar Theraldson that's going to be doing our presentation. And today, what we're going to look at is Insmark. And a lot of you that have been with us a while, you know what Insmark is. You've seen it before. And we're just kind of putting it back out there for those of you that haven't seen it and are not using it, and to show you a little bit more about what it's all about and what it can do. And I feel like there's some power behind it when you can get in front of your clients with an illustration and then show a comparison of an IUL to a qualified plan, and just help them understand, what they're doing, and what options there are out there. So Insmark is something that is free for you to use if you're contracted with us at North American. And we can get a little deeper into that if you're having trouble with it. If you want to give us a call after the webinar today, we can show you how to have access to it. There's a little download that you have to do, but it all connects in with the North American illustration system. And so, Shar, I'm going to hand it over to you. Before I do, there are a couple of handouts. These are the handouts from our presentation today. So if you want to jump onto the GoToWebinar panel, you can download those for yourself for later reference. But Shar, I'm going to hand it right over to you, and we thank you for presenting it to us today.
All right. Well, thanks, Doug, and thanks, everybody. Hope you all had a great Labor Day weekend. I am happy to be here, but I must disclose that I am not an Insmark expert by any means. This is a powerful tool, and there are a lot of valuable features in Insmark. And I feel like you could get a college degree in what you can do in Insmark. So by no means are we going to be able to teach you everything today. We are just going to scratch the surface with one of the best comparison pieces in there that I think you can put into action right away. So, I'm going to walk you through that, and we'll take a couple sidebars and talk about it as well. Like Doug said, North American offers Insmark to our contracted agents free of charge. Now, if you were to contract and pay for that with Insmark, I don't know, it could be $100 a month or something. I have no idea what it is, but I mean, this is a valuable resource that you have at your fingertips. What I'm going to do is I'm in the North American website, and this is how I access the software. So I'm first going to go into the software. I kind of have an illustration already built, and I'll just touch on that a little bit. I do want to let you know that when you're in the North American website page, this illustrations tab here, if you go over to illustration software, you can get to our web-based illustrations with this long green button. And then the Insmark illustration, you'll have to download that at some point before you actually use it. And when you do so, there's the serial number right here as well. So I'm just pointing that out, that you'll need that at some point to install it. But we're going to hop right into the software now and get us started. You can type in any questions that come up along the way, and we'll go ahead and see if we can address those. But I'm just going to walk you through it kind of conversation style, and we'll see if we can help you with this. So the workbook that I'm going to use in Insmark is comparing a Builder Plus to a tax-deferred retirement plan. And so let's go into the software where I have already designed an illustration using our Builder Plus. I don't want this yet. Let's go back to this tab. And I used a 40-year-old male, putting $500 a month into the policy from 40 until 65, and then we show what kind of income he can get. So again, just briefly running through this, 40-year-old male, standard non-tobacco. I solve for minimum distribution, or minimum death benefit and maximum distribution. I have the income 65 to 100. I illustrated it monthly. I used the return of premium death benefit option, and that he was paying the $500 a month to 65. So really it was that simple in the design. And of course, based on your individual case, you know, some of that information can change. Let's go ahead and we'll take a quick look at the illustration, because in order to take the illustration that you're running and have it go into Insmark, you do have to hit view illustration for all of the calculations to come to be. And so that's what we'll just take a quick look at here, and then we'll quickly move into Insmark, where we'll spend the bulk of our time. Calculating here. All right, here's our illustration. And I'm really just going to hop right to the ledger page where we can see our input or our output. So this 40-year-old, let's make this a little bigger. We're starting with a death benefit of $262,000. It's increasing by each and every single payment that he makes, because I use the return to premium death benefit option. So $500 a month is $6,000 a year. We see that money going in. We see his death benefit going up. If I go to the next page, here at 65, we start to see our income coming out, and that's $29,328 a year. But it's being taken out on a monthly basis. And I continued those loans from 65 all the way to 100. Now, we do see people, you know, only go to 85 or 90. You certainly can do that, but usually there's a low point over here, somewhere between 87 and 92 is what I'm usually finding. Once you get past that low point, that income could carry, and so this could go to 120 as well. So you can see at the end, he's put in a total of $150,000, and he's getting out over $1 million if he gets the income all the way to age 100. Now, Doug, I'm hearing just a little bit of feedback, and I just wonder if it's because of your line. I wonder if you could mute your line until.
Let me do that.
Okay. Thanks for that. But do chime in later if needed. So the point that I'm making here is this is $150,000 that he has been putting away over that from 40 to 65 for a retirement type plan, and total money coming out is $1 million. And so it might be hard to start with this type of an illustration when you're having a conversation with a client about why they would want to use a cash value life insurance policy versus a different tax deferred retirement vehicle. And so before we transition to the Insmark, I just want to share with you a couple things to keep in mind as far as the evolution of kind of a tax retirement vehicle. You know, there's not many pensions around anymore. Those started back in the late 1800s, but they quickly became too expensive for companies to administer, and there's very few that are left. You know, certain companies, businesses have them. Sometimes we see them with city, fire, police employees. And then it was in 1974 when the individual retirement accounts came about, and then shortly after that, the 401ks in 1978. Now, those individual retirement accounts, the traditional IRA and the 401ks, have contribution limits. And the IRAs currently, we have a contribution limit of $6,000 a year. So in this example, you know, that's what we were putting in here. But we're going to have some individuals that can put away more money than the $6,000 or want to increase it over time. And if this was into a traditional IRA, they could, you know, run up against those limits. 401ks, believe it or not, you know, not everybody has access to those. Not all employers offer them. And matching dollars on those used to be a little bit more robust than they are today. When I checked out the internet this morning just to kind of see what the standard matching is, it's usually, you know, a insured or an employee can put in up to 6%, or when they put in up to 6% of their income, the employer will match up to half of that, 3%. Now they can put in more. They can put in up to, their limit on that is about, I think this year it says $19,500. But still, not everybody has access to a 401k, And some people might want to put more than that $19,000 away, and more than what their traditional IRA can offer. So the point I'm trying to make there is that with life insurance has been around for more than 2,000 years, and probably in the early 1900s is when it first started being used for a retirement vehicle. And so it's our job and duty to explore and share this conversation with your clients, to let them know that they have other options and alternatives than just the traditional IRAs, the Roth IRAs, 401ks, and those vehicles for saving for their retirement. We cannot count on Social Security because we don't know if that is going to be there. We need to take things into our own hands. And with using cash value life insurance, you have a lot more flexibility, I would say, because as far as we already talked about the limits, there are going to be limits as far as what you can put in here based on the face amount. And of course, based on your current income, multiples of your income as far as how much insurance you can get. But that's a lot more generous than some of these other vehicles. And the other point that I'd like to make is that, I'm showing money coming out here for this guy at 65, but if he wanted to take money out at 45 or 50 for himself for some reason, or for college for his kids, he can do so without any penalties, like if it were to come out of one of those other retirement vehicles. So, okay, so I want you to keep that in mind. Now, before we switch over to Insmark, I have a chart up here. Maybe not. Where did it go? All right, I might have to figure out where that went. I'll pull that up here in just a second. So let's go over here, and while I'm generating Insmark, I will find that other chart that I want to show you. So to get to Insmark, we have to go over, instead of view illustration, which we had to do first to calculate everything, we now have to go to the output options portion on the left-hand side here. And if we scroll down, we'll see this Insmark button here. And then we can click on this, and this will start to open up Insmark and pull in everything that we had in our Builder Plus illustration. So while that's generating, let me see if I can find that other document I wanted to share with you. Okay, so here's the slide that I wanted to share with you, is that when you're helping somebody plan for their retirement, as much as it is about dollars that they can put away now as far as the accumulation phase, we also need to think about the distribution phase during the accumulation phase. And so, and you want to talk about the difference on what's going to happen to those dollars and how they're going to be taxed, and help your clients diversify those retirement assets so that they're not all in the same tax category. And so what I've highlighted here is our tax qualified plan on the left-hand side and our life insurance plan on the right-hand side. And if we kind of just go down it real quick here, at the time of contribution, if it's income taxable or not. So obviously money that we're going to put into, say, a 401k or traditional Roth IRA, that goes in pre-tax. So that has its benefit there, whereas the money going into our life insurance policy is after tax. And then you can see the growth. Yes, both of them, the tax on the growth is deferred. But then if we go down a little bit further, at the time of distribution, is it subject to income tax? And that tax qualified plan, that 401k, for example, is, but the life insurance is not. And then lastly, upon death, what happens to the remaining amount, or in the case of the life insurance, is it taxable? And you can see the difference there. So I think it's important to keep this in mind when you're positioning a cash value life insurance policy for their retirement plan. All right, so let's go back over here. This window had popped up when I hit Insmark, so I'm going to continue with this. And then you'll see I get this like bullseye button down here, and then it should end up on my taskbar at the bottom, and I think I'm going to have to, I'll either click on it. It's a little bit of a slow process, so I just wanted to kind of let you see that as well. When this comes up, you're going to click on the Insmark illustration, this first option. Now, the free version that North American is offering only has certain items that are available. So everything else is grayed out, which is not available in this free version. So we'll click on that. And then Insmark, the Insmark workbooks will pop up. And it's actually popping up on my other screen. So let me drag it over here so you can see what it looks like. So when you come in, you're going to get this window that says, what do you want to do? Do you want to use the last client workbook, use a different client workbook, or create a new client workbook? So for you, most of the time, you're going to have a client's name in there, and you're going to want to say you want to create a new client workbook. I already was out here earlier this morning and preparing the documents, so this time I'm just going to use the last client workbook and say OK. And it's opening on my other screen. Let me pull it over here for you. And let's minimize this just so it's a little cleaner look. All right, so when it comes into Insmark, this is bringing over, you can see what's highlighted here is my proposal, and on the far right, it says the builder plus $262,000 and my $6,000 premium. So I'm going to go ahead and click on new from this point, and that's bringing in my illustration, and then you're going to get this workbook. And so again, we're just scratching the surface today and just really showing you one workbook. But I'm choosing under the personal insurance tab, I'm choosing other investment versus your policy. So we're just comparing one other vehicle, and we're going to use a tax deferred retirement plan to resemble the 401k or the traditional IRA compared to this Builder Plus. So all you want to do is click this, and then you're going to say OK. And now we have 3 more tabs that we're going to work through before we review our output. So the basic data page, I had a 40-year-old, so I can illustrate all the way through age 120. So this happens to be 80 because my illustration was age 40, so 80. So you just want to keep that in mind. Sometimes I've found that this automatically updates on my new age of my new insured that I'm running, and sometimes it doesn't. So just a note for you to be aware of, because our illustration goes to 120, we can go all the way out there. Comparison of plan costs, I haven't included that, although if that's something that you'd like to, you certainly can. The next section that we need to fill in is tax data. So you need to pick a tax bracket. A lot of times I don't change this unless somebody specifically tells me which tax bracket to use. We do have the ability to choose a second tax bracket. And so the point that I would make to you here is you can use a second tax bracket, like when they get to the retirement years, maybe they expect to be in a lower tax bracket or a higher tax bracket, but who knows what taxes are going to be 25 years from now, let alone next year or 5 years from now. And the way, you know, sometimes taxes go up and sometimes they go down, but over the long haul, what do you expect them to do? So it's probably better to estimate a little bit on the higher side than on the lower side. And then, you know, if it is lower, that's better for the client. So this tax bracket here, I'm going to use 31%. You know, we could also add to this depending on what state they're in and if there's a state tax. So you could take federal and state and combine them together and update that. But the illustrations I ran today was just using 31% tax bracket all the way through these years. But again, just a talking point for you where you can customize your Insmark. The next tab that we'll go to is this middle one, the investment details. And now, once you run one of these and you come back in here, it'll have everything that you did the last time. But if you click on this drop-down menu here, the one that I would refer you to use for this example today is a tax-deductible retirement. Oh, that's a mouthful. A tax-deductible retirement plan, TDRP. This will resemble your traditional IRA or a 401k. Now, there's a lot of other ones to choose from here, and you can choose those as you wish. There's also a few at the bottom that say customize. When you click this one, you can actually type in over the word customize whatever vehicle that is. So if we actually wanted it to say 401k, we could choose customize and then type 401k there. the yield that I'm going to use, I'm going to actually use the same interest rate that my Builder Plus was illustrating. So I've already typed that in as 6.27. You could, whatever their 401k is averaging, you could type that in, but I'm trying to be a little bit similar here in those interest rates. Everything else is pretty much grayed out, except for I'm going to go to the middle where the investment fees are. And you would want to apply any type of fees that are associated with the traditional IRA or the 401k. And of course, the life policy has fees because we have cost of insurance charges, et cetera, on the policy. So it would, you really do want to include whatever fees are associated with that so that it's a truer comparison. I usually leave this in unless somebody tells me they've got more exact numbers they'd like me to use. So I've got a sales charge of 1.5 and a management fee of 75 basis points. You'll also see over here, this is pretty important. This, by the way, all of these, like this premature distribution tax, this will be in here because of the setup of the TDRP. But when you choose like a customized, you're going to have to choose some of these, the taxation and all of that. And so that's why I like to use this one because it's already kind of set up by Insmark for me to resemble the 401k. And this 10% premature distribution would be important for those examples when the client wants to take money out to help for an emergency or for college for their kids, because if they were trying to access those funds from their retirement vehicle, they'd be subject to a penalty. Now, over here in the top right, deposits to the investment. So deposits to our 401k, I usually leave that selected as same to the life policy, same as the life policy. So we're trying to mimic that if this guy wants to put $500, we're trying to show him $500 a month into this Builder Plus policy compared to $500 into his 401k that is maybe above the matching element. You would still always want to encourage your clients that if there is a possibility and an opportunity to get matching on your 401k dollars, by all means take advantage of that, or that's money they're leaving on the table. So in the example of if they contribute 6%, the company will give them 3%. Make sure that they're doing that. But if they wanted to contribute, say, 10% or 12% up to that $19,500 limit, maybe it's those dollars that aren't part of the matching contribution that you could position or talk with them to reallocate and position to this IUL policy. So same as what I'm saving or indicating in this section. And then the last page is just the report selection. Now, there's a lot of available reports, and they're available in 2-dimensional and 3-dimensional, and you don't need the red and blue 3D glasses for it. It's just the way the graphics come out. So by no means do you need all of those. In fact, I've only just got 5 reports over here. I did make one change from the handout that I provided to you, Doug. I added this report, taxation of cash flow, and we'll stop and look at that when we're looking at the output. But you can choose these reports. You would just highlight them like this multiple mini graphs, and you could hit add, and it comes over here. Now I have it. I want to remove it, put it back over here. If I want to change the order, I can, if I'm highlighted on it, I can take this arrow and move it down to the bottom, move it back up to the top. This is the order that I personally prefer, but you can have your own preference. If you want to see what the, like when I was coming out here to look, and I knew there was a report like this, I just didn't know which one I wanted. Whether it's highlighted on the right-hand side or the left-hand side, you can hit quick preview and you can just see that one-page document. So remember, when we looked at our Builder Plus illustration, the guy was taking $29,000 out a year. So to get the same after-tax equivalent out of his 401k, remember that money went in pre-tax, he's going to have to take out $42,000 because we have to apply 31% tax bracket, which is about $13,000 of taxes, so that he ends up with the after-tax equivalent of the same 29 that we were illustrating in the Builder Plus. So If you want to see what the report looks like based on the name, you can just hit that quick preview, which is what I did. And then again, you can change the order. So I have everything set up. The last thing before I go to the actual output, you can add a cover page. You can title it. This is the graphic I'm going to use. I had already set this up. You know, you could actually put your client's name in here. You could put your name in here as the agent advisor. You could choose different images, maybe based on what you know about your clients and what they're thinking about in retirement. Maybe this is what they're envisioning is sitting on a beach in paradise somewhere for retirement. So you see that you can kind of customize that. It looks like there's a quote that's by default that I have out here, but you have the flexibility to make some of these changes to the output of how you want to present that to your client. They've actually added quite a few graphics from the last time I've been out here. So you can change a font, all of that. Jazz up your output. I mean, that's if you want to get into colors. I'm not going to mess with that today, but I did use the cover page. And if you don't want it, you can just uncheck this green mark up here. So let's get to the output so that we can show you how you can have the conversation now with your client. So don't hit done. You're not done. We want to preview it. So we're going to hit preview, and that's going to generate the 8 or 9 pages or so that, that we had selected to cover the report. You can see the cover page that I have here that we selected. And then we can use the arrows up, the finger arrows up here to move through the report. A couple notes there. This is, you know, you can kind of read through this. Again, you can decide what pages you want to include and what you think are going to be most impactful with your client. But really, this is just showing, you know, the money going in. And then remember, the TDRP over here is the 401k out at year 80. It's depleted. Out here at year 80, we still have a death benefit in cash in the Builder Plus. We'll see that in more detail on the following pages. In fact, here it is. And let's make it bigger. I'll say for me, but it's for you too. All right. So how we'll first look at this is if we look on the far right, columns 7, 8, 9, 10, and 11. These are all from the Builder Plus illustration that I ran and showed you at the very beginning. Here's our $500 a month or $6,000 a year going in. We started at $262 initial death benefit up here. It was ROP, so every time they pay $6,000, it went up to $268, $274. So it's doing exactly what was on the illustration. So that means that you don't have to use the North American illustration to start the conversation with your clients because it pulled it in here. And then when we get down to age 65, here's that $29,000 a year that we showed he could take out from 65 to 100. And this is just showing, you know, the first 5 years on this page. Now let's contrast or compare and contrast what we have on columns 1 through 6. This is our 401k or our traditional IRA. And column 2 is our same $6,000 that we're putting into the Builder Plus, but this is the after-tax equivalent because money going into that 401k is pre-tax. So he actually gets to take almost $8,700 out of his paycheck, not taxed, and put it in there. So in the beginning, he's actually putting more in. He puts in, you can see at the bottom of this page, $217,000 pre-tax dollars to have the after-tax equivalent of $150, and that's just where it's kind of evening it out to help compare. Now, at the end of, we could even stop here at year 20. After 20 years, because he put more money in, there's $314,000 of cash value in the 401k, compared to $179 on the Builder Plus. Now, the difference between columns 5 and 6 is columns 5 says if the 401k were completely canceled and distributed, you know, we'd have to apply the 31% tax bracket. And well, that might be even a bad year to look at with the 59.5, even if we made sure we went past that to year 21 as far as the after tax and not having that 10% penalty. And then if it were paid out because of death, it shows the difference there as well. So that's what columns 5 and 6 are. There's a little bit more description for each of those columns down here as well with the asterisks. The 2 asterisks here say that we grossed it up in column to match what's in column 3, and a little bit about the taxation on that. So remember, let me back up a little bit. Let's make this smaller. No, I'm going the wrong direction. Smaller. There we go. Remember on that other chart, let me fast forward to that real quick. This one over here, every time for him to get the after tax of $29,000 out of his 401k, he actually has to take $42,000 out, and then the 31% tax bracket is applied. So when you look back at that previous comparison of values, we're actually taking $42,000 out of the 401k each year, but he's netting $29,000. So let's go back and look at the second page where, again, we're matching what we were able to take out of our builder as $29,000 after tax. Again, on the 401k, you could take more or less, but we're trying to compare apples to apples here. And now if we get to the second page, if we keep pulling it out at that rate, this client is going to have depleted his 401k by the time he reaches age 80. So of the same 150 after-tax equivalent that he put into the 401k, he'll come out with a total of $454 or $454,000. But we can continue that a whole lot longer by the way of variable loans in the Builder Plus policy, and the client ends up with over $1 million coming out. This was to age 99, and it continues on the next page. So this is really where you're making the case for the cash value life insurance as another vehicle. I think the last time that that North American presented for Ogletree was we actually had our RVP Gary Procol present, and we kind of highlighted this as well as far as maybe there's a combination where if they can take some of this money out of their 401k and it's not taxed, they could maybe take less out of the 401k that is taxed. And so they can make their money last longer and diversify their taxes. Kind of like on that chart that I showed you at the beginning. And so let's continue to the last page here. This is the 80-year summary. Again, we had the income stop at age 100. We could have had it continue. But you can see down here in the lower right-hand corner, total money in for after-tax payments, $150, $454,000 out of the 401k, over $1 million out of the Builder Plus, and we still have a death benefit and living values, living benefits that can be accelerated on what's left of $4.5 million. So one more page, I think, to show you in this report, and then we should be able to wrap it up here. This page right here is matching values at year 80. It's saying that for the 401k to have matched the value in the life policy, actually the surrender value and the death benefit of 4.5, we would have needed a much higher rate of return on the 401k. So that's that example. And then let's see, what else do we have? And then there's the rates of return, internal rate of return on the money. Again, we have the 401k or traditional IRA on the left, and we have the Builder Plus, both the surrender value and the death benefit on the right-hand side. And so I've included those pages. So again, you can choose which pages you want, which reports. One thing that I'd like to show you is that when you take, and if you PDF this report or print it, it'll come in with the default to print the page numbers. I always like to take the page numbers off. That gives you, the advisor, the flexibility to choose which reports to share. And even though this was, say, 9 pages, no, this was 11 pages, if you choose not to share a 3-page report, the client isn't wondering what happened to pages 7, 8, and 9. So that's just a tip from me, that I choose to not print the page numbers so that I can that you have the flexibility to put them in different order if you choose. So that is kind of really what I wanted to cover today. I'm going to ask that, Doug, if you want to reopen your mic, and if there's anything you wanted to add, or if there's any questions that came in. But remember, I'm not an Insmark expert, but I do feel like I know this workbook pretty well. But I will tell you that Insmark themselves have a ton of helpful resources that you can utilize through their website and in the workbook itself. So, Doug, anything that you'd like to add?
You know, I think most of us, this is our bread and butter case. This is what we're doing the most of. So I think it makes a lot of sense just to be able to hit that Insmark button so that you can create this report. I mean, it's so much easier to go to your client and explain to them, well, hey, yeah, it's an IUL and it does all this, but let's compare it to my other options out there. So it's a great tool to use, and we'll help you get it loaded onto your computer and show you how to use it. We can do some one-on-one with you if you do need that help. So, Shar, thanks for presenting to us today. We did record this, and we'll put it out on for everyone to review later. But guys, if you've got a case you'd like to see illustrated, a real live case, give us a call, and we'll put it together and get it out to you and go over it with you. So thanks again for being on our call today, and we appreciate your business. Thanks a lot, guys. Thanks, Shar.
All right. Thanks, everybody. Have an awesome day.
Yep, take care.